Mr. Rogers once told me that you cannot properly love anyone else until you first love yourself. And I could tell you this right now, I love myself. That sounds arrogant. I love you. You love me. Let's trade some stock options, you see. Let's take a look at the board here. We got the Gilead Sciences still underneath our $79 strike price. Currently at what? 78. Whoa, 78.20. Our plan today is we will accept your shares. Hand them over, please. We will accept those shares at $79. We want to, let's take a look. Let's take a look at it now. We want to start lining ourselves up for some quiche, for some cash flow, because money rule number 2, cash flow is king, cash is queen, and debt is the joker. So we like ourselves some cash flow. We've collected a nice amount of cash flow on the original Gilead training wheel. We put the training wheel on May 1st. We'll go through that in just a moment. But our plan is we were early assigned 200 shares 2 days ago. The remaining 300 shares, the 3 contracts that are remaining in this put trade, will be assigned to us at the end of trading today for apparently $1 over what it is for sale for. But that's all right. That's all right, mama, because we want that dividend. We do. We want the dividend, and it's going to be cash money in our pocket. So we will then have 500 shares. All right. We'll have 500 shares, and we'll collect 75 cents per this quarter for a total of $375. We'll put that money in our actual My Little Pony Velcro wallet and tuck that into our 501 jeans and be on our way. We'll also, of course, continue to sell covered calls along the way. We've sold covered calls in the 200 shares we were assigned on Wednesday, and we will sell 3 more covered calls on Monday. Hopefully, Gilead will be up on Monday. But I want to, let's see, oh boy. Looking at the Big Mac here on the left, I see SPY is now at 430.25. Just a second ago, it was at 430 flat, and I was going to get out of this credit spread and for like $40 profit. Now it's showing I'm taking gas. So what goes up must come down. I always say it doesn't mean that's true because it's making a little bull run on us right now. Green to up to 430.30. So we'll keep an eye on it, and we're going to need to do something soon. We've got it's $4 wide times 5. So $2,000 we can essentially or potentially lose if we don't act fast. So we will do something very soon, maybe as soon as this video. In fact, it may be for sure in this video. We may buy our way out of this, close this thing out, walk away. Wash our hands of this trade. Let's see, where are we at? I don't really want to stand here and watch it all day, do you? No, I don't. It's boring. So let's look. What would we have to do, though, to close it? So if we did 53 cents, that'd be $265. We originally collected $275. Hey, $10. $10 net profit. Oh boy, what are you gonna do? It's just sometimes hey, we should be able to close that for less, right? Let's try to close it at, is it gonna keep coming down? That's the problem with watching the chart live. It just makes my butt stink. So let's try to close it. We'll put this on the board, and if it reds down some more, hey, 1.5. Okay, so we just paid $250 to get out of that trade, and we originally made $275. So that's a $25 net profit, which is better than a sharp stick right in the old pupil. So we got that going for us. Back to the board, back to reality. Checking my text to make sure lady drinks a lot. doesn't need a ride home from her pool day, her lady pool day over at my sister-in-law and brother's house. My brother's at work while the cat's away. What is it? Yeah, while the cat's away, the mice is, that's not a word, the mice will play. That's what they're doing. So Stacy's over there. I think there's like 6 ladies, all real sweethearts, floating around in the pool, having a couple cocktails, eating some nice foods. So let's take a look where we're at. We've got the Gilead. Now, what I wanted to show you on the Gilead is like what has gone on since we opened our very first training wheel position. The training wheel is the put credit spread with the idea of if the trade went anywhere against us and we wanted to own the stock, that we would sell off the long leg for a few more dollar bills and keep the party going by rolling those puts. So here's the original trade. May 1st, it was a put credit spread with the 79 short leg and the 76 Long John Silver right there. And we collected $120 bills. Then on May 5th, which was expiration Friday, Cinco de Mayo, we sold off. We sold to close the 76 long leg. We put $80 more in our pocket. And then simultaneously, we rolled out the $79 put. We rolled it to the next week or what? Yeah, we rolled it. Well, let's see. We rolled it to the 19th. Is that correct? Yeah, we rolled it to the 19th for $150. But before that expired on the 15th, we rolled it again for $160 additional dollars. And then on the 26th, again for $80, the June 2nd for $107. And then on June 8th, we June 8th is when we, okay, you're confusing yourself. That's not hard to believe. So that was Wednesday, right? No, that can't be Wednesday. No, yesterday. So yesterday is when we were assigned those 200 shares. Is that right? We must have been. So we were assigned 200 of those 500 original put shares on Thursday, and we sold 2 contracts, so 200 shares worth of covered calls and collected $56. So that's all the cash flow that we have received. And I have a little note. I haven't put it into the spreadsheet yet, but it's a total of $753, which we now have $39,500 into this between collateral and what we have spent on the 200 shares that we bought. I guess it was Thursday. I don't know why I thought it was Wednesday. But whatever the case, we have collected $753 in cash, and then divided by the 39,500, that's a 1.9% return in 39 days. So if we divide it by 39 days and then annualize by multiplying by 365, we get 17.8% annualized so far. And then our plan is, of course, we're going to collect the sweet dividends starting, locking it down on June 14th, and then we'll have a payout before the month even ends. So on June 29th, we'll have that payout into our pocketbook while already having other calls on the table. We'll sell some more calls. I'll put it all updated into a spreadsheet so that we can track it specifically. But that's what I wanted to show you on the Gilead. We're going to go ahead and take those shares today. And then we have this Coca-Cola 6250 call. And what did we get on that? $7 when we first put it. You could buy like one Coca-Cola for $7. Oh, where was I just paying $7 for beer? And I thought that was cheap. Oh, that's because that was at that concert, that 80s concert we went to on Friday. The reason I thought that was cheap is because I was paying how much for beers at the Cubs game? I think it was $1.2 million, $1.2 million per beer, something like that. I don't know. It was $20 a beer. I can't remember. But $7 seemed very inexpensive. So that bought me one of those beers. So we can look to roll this now. We may roll it out and down just, can we go to 61.50 and still catch any dollar bills? Because I don't want to lose it in the meantime, because we've got some money to collect from Coca-Cola as well. So yeah, on the 15th, we have another ex-dividend date to lock in 46 cents per share for the quarter on the Coke and the Cola. So we don't want to lose our shares, but we don't mind making a dollar bill. So we'd have to go to 62. So I don't want to go to 61 and then risk it for the biscuit. All right, even though it's such a huge difference. You could go ahead and risk it for the biscuit. Just talking out loud with you. Just talking out loud. Looking over at the Big Mac, and now the SPY's down to 429.88. You could have waited, Bart. Yeah, but I didn't want to because we don't know what's going to happen with the SPY today, do we? So we have to, I don't have to make a decision on that. I could just let it ride out into the sunset. Okay, so if today's the 9th, that would make next Friday the 16th, and dividend date is what? The 15th. So it's Thursday. And for some reason, I think, and I don't know, a lot of times I think one way and the market goes another. I think that the Fed will not raise rates next week, according to the CME Fed Watch. The Fed Watch tool, we're 4 days away from knowing what's going to go on. And they're saying that there's a 73% chance that there's going to be no change, that they're going to finally say, all right, we're going to pause for a moment, but there is still a 27% chance of a rate hike. So the 73, I would imagine the market would react favorably because that's what they expect. And, the market does not want uncertainty. They like certainty. So if it bumps up a little bit, I can blow through my strike, lose my shares, and of course they could easily grab them up early, and then I could potentially miss out on the dividend and ownership of the stock. So I'm just going to leave it on the table right now. I'm going to leave it on the table. Is there any dollar bills on the 59? Is it even possible to try to collect $2? I'm not even going to mess around with it. On this credit spread we put on, we collected $20 on June 6th, and it looks like we will just continue and roll that right out through the sunset and have $20 of full profit on that trade. The AT&T 1450 puts doing very nice. And what did we make on that? We put $70 in our pocket on that, and it's at 1596, so we're good to go there. If it continued to drop, I would take AT&T at 1450 all day and twice on Sunday. Target, though, is taking it on the chin again because they've been downgraded by an analyst or two. Fresh news on that. So Target at 127 and the 78. So what I'm going to do is let these calls ride out into the sunset. And then when Target bounces on Monday into the green, we're going to sell those covered calls. So that's our plan for the Target. And then first thing on the board coming up next week, and that would be Thursday, is we've got a 428/430 call credit spread on the SPY, which is currently just gas facing it because it's at 428 and SPY is at 429.92. So we'll see. We don't know. What do I have? That's $800 worth of potential losses. Could cut my losses now, but we'll go ahead and roll the dice and take our chances on that. Probably shouldn't though, should I? I don't know. The market seems odd to me, but it has all year. It seems like it's overly exuberant. Signs are that maybe indeed there will be a soft landing. What about earnings coming up? Are we going to be in an earnings recession? And of course, when we're investing into these companies, we want revenue, we want profit, we want net profit, we want free cash flow. All of those things can easily be affected coming up and reported to us in the next earnings reports from our favorite companies. So we will see what goes on there. I'm thinking about making a move on Merck, the old Merck, because I got like a real soft heart for dividends. And Merck goes ex-dividend next week on June 14th, and they've got a 265 dividend yield. They got great ratings, buy, strong buy. Their dividend safety is A-, A+, B+, B+. Dividend history is very nice. They've got 12 consecutive years of dividend payments and dividend growth. So if we look back through, they're currently at 73 cents a share. So they'll pay another 73 out, and then they're going to raise it again according to their track record. And they don't just raise it by a penny like a lot of the companies do. They're doing 4, 5, 6% raises and higher. So, I might get in on this, mate. I know my friends over at Alpha Spread, they say that Gilead, which we're making a play on right now, it's only worth 76.83, Bart. Why would you buy it at 79? I don't know. We'll find out. We will find out. And then Merck, what do they think of Merck? Alpha Spread thinks that it's undervalued by just 5%, but it's a steady eddy. It is a steady and the eddy, and it pays a decent dividend. I'm a sucker for the dividend, sucker MC. So we'll come back, take a close look at Merck, and see if we're going to make a move on it before the end of business today. Because if I'm going to do it, I want to do it so I can then immediately turn around and sell covered calls on it before the weekend. Thanks for tuning in. Subscribe, like, comment, and I'll see you in the next video.